Hey guys, Joel Frank here, market analyst for YouTrading. And in today's video, we're going to be taking a quick look across markets and looking at a couple of potential trades that I think could play out this week. Let's start off with the US dollar, or the US dollar index anyway, the DXY. And you can see that it attempted a breakout of its recent downtrend last week, but it looks as though this could turn out to have just been a fake out. We found pretty strong resistance at the 21-day moving average there. You can see we're now testing this former upper bound of the downtrend at the moment. And of course, if the data this week, because we've got a lot of data coming out in the US. In fact, let me bring the calendar up. And in some important Fed events as well, like the Fed minutes on Wednesday. But if this week's macro events prove to be bearish for the dollar, we'll go through what the macro events are in a minute. But this could potentially reinsert the DXY back into its prior downtrend. Of course, if the data is bullish for the dollar, then we could see a more decisive move higher, break above 21-day moving average, push towards the 50-day moving average in this support term resistance area around 103, 103.50 actually. But that's what you want to be looking out for the dollar, whether it's going to break or fall back into this downtrend. With regards to the S&P 500, it's kind of been going sideways in the last couple of days. Internet's a bit slow. Just get this chart to load. Yeah, you can see there it's within recent ranges. We've been stuck in a sort of 4,060 to 4,140-ish range in the last couple of days. But the short-term technical trends are looking positive. You got the major moving averages all pointing higher. The 21-day moving average is just about to go back above the 50-day moving average. And, you know, if events this week are, well, if events this week don't show that the US economy is doing too badly, but at the same time put less pressure on the Fed to be quite so aggressive with their rate hiking cycle, that could be kind of Goldilocks, and that could continue to lift this rebound. Unfortunately, you know, this is just my sort of prediction, but I think the data in the coming months, or just the US economy in the coming month, is going to fall ever closer towards recession. And I think this could potentially, although I think that's also going to go hand in hand with easing expectations about Fed interest rate policy, I think it's going to be a struggle for stocks to maintain like a super strong rally anyway. We might be able to hold within recent ranges, might even be able to push in above the recent highs in the 4,200 area and on towards the highs from last August in the 4,300s. But, you know, ahead of this recession, which I'm predicting, and you know, I'm not some genius here, like loads of people are predicting it. I think it's way too early to call a move back to these all-time highs that we got at the beginning of last year. But quick look at the Nasdaq 100 as well. Things looking actually a little bit more bullish potentially. Just let everything load. Yeah, you can see it's been finding good support ahead of its 21-day moving average, which has been moving decisively higher. You had the golden cross recently. You got the 100 about to go above the 200. I mean, we're definitely in an uptrend if you want to draw the lines up. Definitely a nice uptrend. That kind of thing going on. So as long as financial conditions continue to ease, meaning a weaker dollar and lower yields, which I'm thinking probably will be the case. A lot of these tech stocks which make up this index, like the big powerhouse names like the Apples and Microsofts, they're kind of seen almost as a bit of a safe haven against a recession because they tend to do well no matter what economic conditions are like. So you might even get a bit of a safe haven demand into this index. And I think this index has got a better chance of rallying towards the August high in the coming weeks and months than the S&P 500. So that's what I'll be watching out for. Potentially, we actually, you know, this resistance, or yeah, resistance turns support area just around 13,000, well, just below it. That could be an interesting area to watch. You've got the 21-day moving average coming into play there as well. If we retest that, maybe we could bounce. Of course, if we break below it, maybe that could trigger a bit more of a swifter move to this other sort of shorter term support turned resistance area around where is that, around 2,500, 12,500, which is where the 50-day moving average is. And then potentially, you'd fall down here and then you'd test the bottom of the trend channel, and then potentially you could push up again. That might be the better trade, actually, to be honest. But that's something you could be looking out for. What about oil? This is an interesting one. Oh, that was the wrong symbol. Here we go. Looks like we're finally going to push out of this range that we've been stuck in for the last sort of 6-7 days. Remember, we had this jump that got triggered by the the surprise OPEC output cuts. We've got this very key area of resistance around 82, sort of 83, 200-day moving average, support term resistance going all the way back to last October. If we break decisively above there, then wow, we're in for a potential swift move. Swift $10 move, actually. How much is that? That'd be more than a 10% gain, wouldn't it? It'd be like a 15% gain, all the way back to this kind of area. I mean, you got to watch the charts and trade what you see. So if we saw that break, it's on the cards. I mean, fundamentally, I'm not convinced by the macro, the poor macro outlook. I think will continue to weigh on oil prices, or at least cap its upside. So I'm not personally betting that that's going to happen. But like I say, trade what you see with the charts, and certainly, if we can break above this resistance area here, then we're in with a shot. Finally, let's have a look at what is happening with gold. If the charts ever load, which they should eventually, you can see we're undulating either side of 2,000. Let's get rid of all that. Let's do new analysis. Technicals still looking all pretty good. Kind of like the NASDAQ, we've been finding support sort of above the 21-day moving averages. All the major moving averages pointing higher. We've had our nice golden cross with the 50 going above the 200-day. That was, well, actually in January. 100 going above as well. 21 above the 50. It's looking pretty nice. Looking pretty nice. Definitely in uptrends. We can draw these ones up. These are probably the uptrends you want to be looking at. Upwards trend channels. Yeah, that's a pretty nice one. I certainly think that if my fundamental sort of prediction that the US is heading towards a recession and Fed interest rate expectations are going to continue to ease in the months ahead, I certainly think we're going for new all-time highs soon, very soon, for gold. Because, let's just have a look at yields. They're consolidating at the moment. This is the US 10-year yield currently consolidating just by its 200-day moving average within recent ranges. But, if I'm right about what's going to happen with the US economic situation, then this is where we're going, down. Same with the 10-year, which is also currently hovering within recent ranges. But, like I said, this week's data could be a catalyst for further downside if it's weak and deflationary. And then I think just generally in the coming months, that's the way the data is going to go. And that's going to weigh on these yields. It's going to weigh on the dollar. That's going to be a good combination for gold. And by the way, let's just bring up Bitcoin as well, because Bitcoin's been a nice mover so far on the week. You can see it's popped to its highest levels since last June. And it looks like, depending on what happens this week with the data, but if it does, the data this week does weigh on the dollar and yields, then we're probably going to hit this level here. But yeah, anyway, just quickly, what was the data? CPI coming up tomorrow on Wednesday. Fed meeting minutes as well. PPI Thursday. Core retail sales data on Friday, and the preliminary University of Michigan consumer sentiment data on Friday, as well as a smattering of Fed speak. Those are your key events to be keeping an eye on this week. A lot of important stuff. But yeah, guys, hope you all found this video informative and enjoyable, and I will see you all in the next one.